Hi, this is Zach with the Bulletin Board Heroes here at Zach's Traders Cafe for Friday, the 5th of May. Starting off with the FTSE 100, which is dancing either side of the 50-day moving average around 77.50. We've been down towards the 7,700 level, but the moment it looks as though we might get away with this kind of support there for the market. If we don't, which is also obviously possible, 76.30. Initial April support could be on the way. If you're cautious and you want a proper signal or a momentum signal that we're actually going to bounce over the next day or so, that would probably be from an end of day close for the RSI back above neutral 50. It's currently around 45, so that might be something to wait for. Otherwise, we're just looking for that resistance line there from February to be broken around 79.20 to give us a big push to the upside. But the pattern there from February going into May, possibly an inverted head and shoulders, but obviously it depends how this right shoulder pans out. We don't want to really see it go any lower than it has already. Moving on to the DAX, which was basking in the glory of being above its former resistance at 15,700 over the recent past, and it's managed to continue that, so it's 15,700 the support there over the last few weeks. That was the old February-March resistance, and above that we're looking for an eventual move to the top of that rising trend channel from September around 16,500, possibly as soon as the end of this month. On the downside, below 15,700 risks a move to the floor of the channel at 15,400. The good news here is that the RSI bounced twice above the neutral 50 level, which is a comfort in terms of being a continuation signal for the bulls. On to the Dow, which has been a problem area compared to the other two markets we're looking at. Here we had the fear that there was the possibility of a test of the 50-day moving average, which we had after that bull trap through 34,100, the old one-year resistance line. The current situation is that we now risk below the 50-day line at 33,000, we risk a move down to the floor of that rising trend channel from last September, and the 200-day line at 32,700. But it would be extremely disappointing if we went any lower than that over the near term. Ideally, we find support between the 50 and 200-day lines and then rebound. As in the case of the FTSE, the RSI is well below neutral 50, so if you're looking for a signal in terms of that, an end of day close for that back above 50 is what is required, which is probably a session or two at least away at the moment. Moving on to Bitcoin, where it's all about trying to get back above 30,000. So far, we're trying hard. We bounced off the 50-day moving average, the rising 50-day line, the blue line there, twice over the last few weeks. And if you are a keen trader, you'll be looking for an end-of-day close above 29,100 in the April resistance line to give us that move up to 34,000 and the old June resistance line projection. So let's see if that can be achieved, hopefully by the end of this month. Below the 50-day line risks a test of 26,700, a support of March and April. On to the stocks, and starting off once again with Arrow Exploration, where we're still looking for the shares to give that definitive move through 20 pence. I'm sort of thinking that it's going to happen pretty soon now, hopefully over the first half of May. The reason for that is that we had a gap to the upside going into April, and we've had a gap fill rebound since then, which was the one at the end of April, so bouncing off the floor of the gap there at 17 pence. And then for this week, we gapped through the 50 and 200-day moving averages, and we have maintained the top of that gap at 17 3/4, and we've also broken the gap up day, which tends to be a signal, a decent momentum signal. So above 18.5 on an end-of-day close basis, looking for the shares to get back into the 20 pence plus zone. And the other point to note for eagle-eyed technicians is that now both the 50 and 200-day moving averages are rising, which suggests that the next time they cross will be a golden cross, and the run-up to a golden cross tends to be the strongest part in the technical cycle. So even though, let's say, the shares have been consolidating for the best part of the year, this looks as though it could be the time when there is the breakout towards 20 pence, and in fact up to the top of that channel at 23 pence, and hopefully 23 could be hit by the end of this month. Moving on to the Bushveld Minerals, which has bounced off this falling trend channel, which has been in place since basically September last year. Looking for an end-of-day close above the 50-day moving average at 4.5 pence to give us a move up to retest March resistance at 5.75. Ideally, we stay above the old September support there at 4.1 pence in the meantime. On to Barron Oil, which has been horrible on the basis, and that's on the basis that we've had that pullback from 0.25 pence, which presumably would have upset lots of people. We've had a bounce off this falling support line there from November. And what's interesting here over the near term is that we had a gap down yesterday, but we could have a gap close buy signal. So end of day close above basically 0.11 could be the signal to reignite the recent rally that we had earlier in the year. And then that would put in March resistance at 0.17 as the initial target. So end of day close above 0.11 or 0.11 and above. And we're looking at 0.17 hopefully over the next few weeks. On to Ben's Creek, where one is hoping that today's RNS is the one that turns this situation around. So far, we're up nearly 5%, but we have had a bear trap gap reversal, so below the old support there from April, around 16.8 pence. Above that, got a chance of retesting 20 and breaking that line of resistance from January. Best case scenario above the 16 pence zone is that we head back to 26 pence over the next 1 to 2 months. But clearly we would need to get back above that January resistance line to prove the recovery argument there at Ben's Creek. On to Corcel, and the shares have managed to continue their recent recovery, the recovery since December. I did talk about this in the RNS hot list today. The situation at the moment is that we've broken above, or bounced above the 200-day moving average at 0.31, and above that, looking for a target as high as 0.65 by the end of next month. Obviously quite a punchy call there, but the configuration there with the shares finding support above the 50-day line and bouncing off the 200-day line looks particularly encouraging at the moment. So above 0.31 up to 0.6 pence plus. We have the return of Chaarat gold, which is a welcome thing, and here you can see that we're in bear trap territory, so a bear trap from below the September support there around 9.3 pence, end of day or weekly close above that, and we could be heading up to retest April resistance as high as 12 pence over the next 2 to 4 weeks, bouncing off the oversold RSI area as well. That's the most oversold in over a year. Best case scenario here over the next 2 to 3 months is that we hit the top of that broadening triangle from back in June last year at 16 pence, perhaps by the end of next month. On to First Class Metals, which has delivered, well, it's lived up to its name, really, actually. We had an unfilled gap to the upside yesterday, which was duly noted, a triple bounce off the floor of that rising trend channel from September. And the view was that above the 50-day line at 12 pence, we were looking for 16 or 17 pence. And obviously after today's move, that's looking a little bit more likely. Hopefully that will happen during the merry month of May. At this stage, only well below 11 pence, really delaying the upside scenario. On to Genedrive, where you can see that shares have, a bit like Barron Oil, finally bounced after maybe upsetting lots of people with that pullback from 45 pence plus. Bounce off the 200-day moving average is nice, and also over the oversold area. All we're waiting for now really is an end-of-day close through 22.5 pence and that April resistance line to take us back to basically the old support area in March around 32 pence. So breaking 22, really looking for 32 on Genedrive. One of the best recoveries of the recent past has been Hellenic Dynamics, not diamonds. Here we had the feeling that the shares were turning around just around the 0.1 pence area with that rising 50-day moving average curling up as it did towards the end of last month. Initially the target was 0.16, and now the target is that second resistance line projection from back in December as high as 0.23 or 0.24, hopefully well before the end of this month. But the upside certainly valid while we're holding above 0.16. If you're cautious, you'd wait for an end-of-day close through the 200-day line around 0.2 before assuming that there'll be any more in the upside in the stock. Moving along to a stock which hasn't had any coverage of late here, so Mobility One. Here you can see that shares are just about to break or have broken that line of resistance from January. You want to see them break the 50-day moving average as well at 7.5 pence. We've got bullish divergence there, an uptrend. It's quite a steep uptrend line there in the RSI window. So above the 7.5 pence area, looking eventually for 13 pence as soon as the end of next month. Ondo is back and making progress. Maybe a bit slower than some people want, but nice consolidation here above the initial spike there last month at 14 pence, or in fact around 13.75 to be precise. Above 13.75, we're still looking for the shares to hit as high as 20 pence by the end of this month. 50 and 200-day lines rising nicely, so that should give the shares one final bit of momentum to get towards that 20 pence area. Just a couple of stocks to go now. First is Sareum, which used to look out like a broken record when we had that rally back in 2021, but obviously those glory days have temporarily gone. Current situation is that above the 200-day moving average at 124, we're looking for £1.60, and above that maybe as high as £2 by the end of next month, if we can get decent support to come in at and above the initial May resistance around £1.32. So ideally there's more closes above 132. That takes us to 160 and then up to £2. Finish off with a stock which has continued to frustrate the bulls. Hopefully this is the last time it will frustrate the bulls. In fact, it might actually cheer the bulls. Here we've had a decent bear trap reversal from below the initial April support there around 5.25 pence. Above 5.25, we're looking for 7.25 as soon as the end of this month, and hopefully much more. There's no reason why we shouldn't be able to get up to that 200-day moving average area around 9.5 pence maybe by the end of next month, if this is the U-shaped recovery that we have, or it appears to be. We've also got a bullish divergence line there in the RSI window, which should give the momentum to this situation that the bulls need. Finishing off with a requested stock, T42, and here you can see that we managed to break out of the range described by that resistance line there from back in September. That was around 6.7 pence level. Above that, we're looking for further progress towards the top of that broadening triangle from April last year as high as 19 pence. As a best case scenario, maybe by the end of the month. Otherwise, below 6.7 pence would delay the upside. Ideally, we stay above the 200-day moving average at 7.8 pence, but we've got potential 19 pence target if we can hold above the 200-day line level. That's it for me today. More updates over the weekend.